IRB Infrastructure Developers, Limited or IRB on the NSE shows a mixed fundamental picture. Valuation market capitalization is 428.53 billion rupees. The trailing PE is 70.96, indicating the stock is priced high relative to its earnings. The price to sales or PS ratio is 5.78, suggesting a premium valuation compared to revenue. Profitability profit margin stands at 8.2%, which is moderate and shows the company retains a reasonable portion of its revenue as profit. The operating margin is 51.4%, indicating strong operational efficiency. Quarterly revenue growth is 27.2%, showing robust top-line growth. Quarterly earnings growth year-over-year is 45.1%, reflecting significant improvement in profitability. Financial health. Total debt stands at 186.53 billion rupees, with a high debt-to-equity ratio of 135.715, indicating significant leverage. Operating cash flow is 40.54 billion rupees, which is positive and supports debt servicing. Stock performance. The stock has increased by 43.56% year-to-date, showing strong market performance. Recommendation: hold. While IRB shows strong growth in operational efficiency, its high valuation and leverage warrant caution. Monitoring debt levels and market conditions is advisable. Revenue and earnings. Revenue has shown consistent growth, with the most recent quarter reporting 74.09 billion rupees. Net income to common trailing 12 months is 6.06 billion rupees, indicating profitability despite high leverage. Cash flow and debt. Free cash flow is positive, supporting operational needs and debt obligations. Total debt is substantial at 186.53 billion rupees, with a debt-to-equity ratio of 135.715, suggesting reliance on borrowed funds. Market position: IRB is a key player in infrastructure development in India, benefiting from government initiatives and increased infrastructure spending. Investment risks. The high price-to-earnings ratio of 70.96 suggests the stock is expensive relative to earnings, which could pose a risk if growth expectations are not met. The high debt level could impact financial flexibility, especially in a rising interest rate environment. Growth potential. The company has shown strong quarterly earnings growth of 45.1% year-over-year, driven by increased infrastructure projects and efficiency improvements. Conclusion: IRB's strong growth and market position are attractive, but the high valuation and debt levels require careful consideration. It may be suitable for investors with a higher risk tolerance looking for exposure to India's infrastructure sector.